Good to see you, Jack.
Good to see you, Blake. How are you doing?
Oh, I'm doing pretty good today, man. I'm excited. The Fed began their rate cut cycle and the market is reacting accordingly. It's going up. So
Yeah,
I don't
I,
know.
I
You know,
was
it's
wrong. I was wrong. I had a no rate cut bet,
well,
and we got the quarter. But
we
that
did.
was really the quarter point cut was built into the market. It was already priced in. I mean, we
It
gave
was.
nothing really happened.
Yeah, it was a big old nothing burger. We sold off, and when we were selling off, I was like, man, Powell sure is being dovish on this meeting for as big of a sell-off as we're having. And they bought it right back up, and here we are again today, pushing
Here we
higher.
are.
I'm like, when's it gonna stop? I don't
Yeah.
I don't know. Just gonna trade what I see, I guess.
I was just talking to this rancher this morning over coffee, and he says none of it makes any sense anymore. You
It
know,
doesn't. Like,
yeah, it
just
really
trends
does.
up higher
Yeah. So far, this market
so
will come
far.
down. It's looking for a reason to come down. I mean, it could have come down on this rate cut because it could have been interpreted as the economy's really getting weak, but it didn't react that way.
No,
So it'll probably be some kind of black swan thing that we didn't see.
very possible.
And it's like
And
every day, you wake up, you don't know what Trump is going to say or do or what's going to happen globally. And I don't remember a time in my trading life that one president could make such a difference on a day-to-day basis in how stocks temporarily moved and how news out of nowhere could move a stock and then not move a stock. Like Nvidia, for example, you guys know I'm long. You get news out of China. China says we're not buying anymore, and we're going to ban Nvidia chips. Just after
yeah,
China got done crying for Nvidia chips, now they're going to ban everybody else can't use them. Nvidia goes down, then what happens? Goes right back up.
Yep. And this is top company in the world, one of them. So pretty crazy, man.
what's Nvidia? Oh my gosh.
I
It's
mean,
still going.
shouldn't like gap like this. This is crazy.
The
This is
sold
what
off 3%, gap back up overnight.
I don't know, should hoods, whatever. It doesn't everything it's like this is how it works, It's like for my own self too, I'm
Wait,
like want to stop saying it should or shouldn't do something.
what's going on with Intel? Up
Oh yeah, dude.
23% today.
Yeah, they
What
signed this.
happened there?
I think Intel got a big investment from Nvidia.
What
They
the?
got a huge investment from Nvidia, and not just that, a commitment.
Yeah.
Help them turn this thing around. I always talk about when I pick a stock to hang on to, it's as much or more about the jockey than anything else, not the horse, right? Jensen Wang, he's one of the best jockeys in the world. All these guys at Intel, they should be fired.
Yeah.
They, they haven't been able to get this dog going in
It,
forever.
I
it's
know.
been, yeah, and their chips are bad.
Intel was a horrible stock before the AI boom, and then that's like really kind of like sent it higher, but it's still I can think kind of think it's still not a great chip company.
I can
Yeah, they're
remember in the
none of them are
day
good.
when we talk about the Mag 7. Back in the day, they just talked about Wintel, Windows and Intel, right?
Mm-hmm.
Intel was a ripper. And then through a change of management, and now they got a bad jockey in there, and they're just running this thing into the ground. Hello,
Yeah,
Kane.
we
What's
got
up,
Hey, how's
Kane?
it
Kane.
going? Good to see you.
Good to see you.
We're talking about the jockey and the horse, and I was talking about how back in the day, you guys are all too young for this, but the Wintel theme was like the Mag 7. It was Windows and Intel. They called it
Oh yeah.
Wintel, and Intel was just on a rip. And then through a series of bad board members and management, they ruined that thing.
I
Yep.
remember Intel when I was in college, every engineer wanted to work for Intel. They had like, and their claim was their research park had the next like 20 years of technology set and ready to go, and they're just way ahead of the curve of everyone. And now
Yeah,
they're like the dog of the
it
sector.
is. It is. The jockey's terrible and should be replaced immediately. But we're talking about how NVIDIA's investment in it bumped it up, and you don't see companies move double-digit percentages when they're that large of a cap stock to begin with. So I'm
Hmm.
always
Yeah.
amazed at that kind of a move.
Yeah, we went, I think some profit panel. I don't know if either of you were on. I think it was with Jeff. We talked about going long on Nvidia. So I picked up some shares. We're up like 30% today. Or 30% so far since we opened the position, but it really popped after today. So that was no technical analysis. That we were up a little bit based on the technical analysis. So I won't take zero credit for it, but certainly the big move came after the news. So I don't know if anybody was in on Intel, let me know in the chat.
Yeah,
Uh,
I'd love to know too, because I feel like that was a sleeper stock.
yeah, Doug, I don't know what you're meaning, man. We just got a 25% winner on Lumen last week on Project X-Ray. So I don't know, dude. Take that any day. Um, yeah. So Kane, it's been a while. What you looking at on what are the gamma levels now that we're just going higher on SPX?
Yeah, well, so gamma, if we're looking at it is implied all the way out to the end of the year, 7,000 is possible. There is definitely some positioning over there. In a nearer term, we are looking at 665, 670. Obviously, those are just logical points, but there is gamma exposure there. Personally, though, I would love to see a pullback before we before we go there. I get nervous every time that the market just kind of shoots straight up like that, and I just think that a pullback would make that a lot more healthy and a lot more likely, actually.
Amen.
What are you talking about? We had a pullback yesterday.
Nah,
We
Yeah, that
touched the
little
EMA.
not
tag of the
he's not talking about a pullback for 2 minutes. We're talking about a
That's what
change of
the
hands.
markets move faster than ever before, Kane.
That's
Funny,
right. Yeah.
no, you're right though. It'll be a lot healthier. You know, it has to go down to go higher, as weird as that sounds, but it has to change hands here. This is not normal, folks.
Yeah.
And I get nervous when it goes up like this too. When everybody's happy and giddy, it makes me very nervous. When we get more volatility and some good house cleaning, I love that kind of a market. So I'm with you, Kane. I'm nervous about this. Looking at it go up no matter what. Uh, we're going to get a little black swan that nobody sees coming, maybe.
Hmm.
Yeah. Well, until that happens though. Um, let's see what's cruising today on the heat map. What's leading? Some of the tech stocks, Nvidia, kind of a mixed bag actually.
Yeah, I think XLK hit an all-time high today. Yeah, XLK, the tech ETF, is at an all-time high. Uh,
Yeah.
Mags, all-time high. Yeah.
That's a lot different than a 52-week high. There's a
Yeah.
complete
Yeah.
lack of overhead supply at this price.
Yeah. And then one that I was a little bit of a sleeper that popped up. It was on my watch list, but then I haven't been looking at my watch list. So shame on me. Cummins CMI has hit an all-time high also, and they are in a completely different sector. They're in diesel and natural gas engines.
Mm.
So that was really interesting also.
Yeah, really. I got to write that down. What's the dividend on this?
Let's see. 1.8%.
Wow, I love that chart.
Yeah.
I was just seeing if any of the other energy companies maybe were popping too. Yeah, that's
And then
pretty
there was,
good.
I think there was another one I was looking at. I'm trying to check my phone for alerts. that I got. And I think it was just XLK and CMI. Yeah.
Yeah, nice. Pretty good earnings. This is a diesel company?
They do. So their company profile says manufacturer and distributor of diesel and natural gas engines and powertrain related component products.
Interesting.
Turbochargers, transmissions, batteries, and electric power systems.
Interesting. I guess that could be bullish for the economy if the freight demand is picking up.
Yeah.
If Cummins is see what Sting's doing. Ooh, Sting's popping too.
Yeah. Yeah, I was following that for a little bit of a pullback to that EMA right there
Yeah.
today. Or
Yeah.
so, if it bounces, I'll be very interested in STNG.
What are gamma levels on this one?
Let's see. 1 second.
That would have been a nice.
We are at the major, like there's by far all, like the majority of the gamma is right at 60. So exactly where we are.
Yeah.
So yeah, so since we haven't really rejected or bounced yet, we could stick there for, it might be a chop, right? It might consolidate here for a little bit.
Yeah.
How about let's look at the gamma on IBIT.
Yeah. Okay.
Just to let you know, this morning I sold the 63 strike price naked puts that expire
Nice.
October 24th.
This is a spot price ETF, right?
Yeah.
I wonder if gamma is as indicative of this, since it's like crypto based.
Yeah, let's take a look.
Yeah. Here we go. We've got the major, probably twice as much gamma as anything else is at 70. And then the next biggest one is where we are right now at 67. All right. So if we move past 67, it looks very good. 70 looks very good. Yeah.
Nice.
That'd be perfect. I'm short the 71 calls and the 73 calls.
There you go. Yeah.
So
Very nice.
Yeah, it's been a weird, I feel like it's been a mixed day in general. Like there's not usually by this time of the day we have like 400 plus like unusual flows coming into the scanner, but it's kind of only, it's like half what it normally is today. And even the ones we were getting was kind of hard to figure out signals because it just was like up and down, calls, puts. There was no clear direction on anything.
Yeah, I think it's a confusing time in the market right now, like because we are at all-time highs. Everything does look bullish, but then, like Jack and I were saying, it's like, but we really want to count on that continuing without some sort of pullback.
Right.
yeah. And seasonality wise, September is pullback month, and
Right.
we're just not seeing it. And people say, they laugh when I say, well, maybe it's different this time, because every time you say that, it's not different. But this,
Yeah.
there's
this time,
it's too complex. I don't know how Powell could do his job. You have conflicting data and you have complex data, and it's hard. And what used to work and what used to be related to whatever, it's not the case anymore. It's broken all kind of chains, and the old ways aren't working. And this is new era.
yeah. Crystal, I think it's you on iPhone. If you're slow, I would not recommend day trading because then you have to be fast. You got to be able to move those fingers, or at least that clicking finger, around the computer quite quick sometimes to do day trading. But longer term swing trades would probably be better for folks who aren't as quick on the computer screen there. Bodine, what's up? Hey, Bodine, good job on that win you got. I saw your email. I will respond to you. But
Liberty's talking about how much money is sitting on the sidelines in money market funds. Probably a good bit, but the other thing is you got all these 401ks and all these pension plans every single month pouring more money into the market, and by their charter they have to buy. They can't even keep it in cash. They got to be fully in.
Yeah.
Yeah, every single month these payrolls are pumping tons of money in. Whereas the money market money, that's where people got to say, hey, rates are down. I'm missing out on this big run. I'm going to sell my money market funds and put it into the stock market.
yeah, and so those flows usually come in. Well, I guess they only come in on the beginning of the month, or they come in at the every 2 weeks, basically, with the payments and stuff. I don't know when the allocation schedule is for those.
Right, they should come out of every paycheck, right?
Right.
So however often people are getting paychecks, they should get them.
Yeah, so like every 2 weeks, beginning, middle of the month. Plus we got OPEX tomorrow, September 19th. So I mean, if there is a rollover, after the OPEX, sometimes there's some rebalancing.
Yeah, it could be OPEX. It is a major one, right? It's also quite, well, I guess there's no such thing as quadruple witching anymore. So it is triple witching tomorrow. So that could see a major change in the direction of markets as well.
Yeah. Yeah. So, and dry powder is always a good thing to have anyways, because you never know when it'll turn and be a buying opportunity. But yeah, it's just these just tiny little dips here.
Yeah. For the market oh no, that's IBIT. Let me come back to that. Let me load up the SPY.
Okay.
Yeah. I just want to see how much gamma is expiring tomorrow versus the total exposure. And that'll give us an idea of how much things might move.
Hey, maybe you give the participants a quick definition of gamma, Kane. I don't ever want to talk over people's heads. So
right. Okay. Thank you for that reminder. So gamma is the way that we're using it. When we say gamma, we're actually mean gamma exposure. And what that means for the market maker, it can mean a lot of different things. And we're taking the perspective of the market maker of the options. And so for the market maker, gamma exposure is where they have the most amount of risk, or how much risk they have across all of their options. So if they have a lot of risk, that means they have to hedge a lot. So about 90% of a portfolio manager's job is just rebalancing, constantly rebalancing for their risk. And they're going to constantly adjust their hedging. So gamma will tell us how much risk they have in the markets, and then we can use that to measure how much hedging activity they're going to do. So for example, if we go from where we are in this SPY right now at about 663-ish, and we move up 1%, so that's about 6, right? So if we go from 663 to 670, that market maker has to hedge themselves by buying underlying shares of SPY. And if they have a lot of risk, then they're going to be buying a lot of shares. And if they buy a lot of shares, then they're going to represent a significant volume. And then that's going to automatically push the price towards that level. If they don't have a lot of risk, then forget about it. It's not that meaningful. But if they have a lot of risk, then they're absolutely going to participate. And their participation, their hedging activity will actually move markets because they're big if they have a huge amount of exposure. So for example, right now, coming off tomorrow in the SPY, the market makers have $2.9 billion of exposure coming off, and their total exposure is $5 billion. So about
2.9 billion coming off, total exposure 5.
Yep. So that's a lot. It's about 60% of all exposures coming off tomorrow, and it's going to need to be it's not going to just disappear. Participants are going to roll, or they're going to go into new expirations. They're going to place new positions on the SPY, and so depending on where they put them, if they put them above 663, then we'll have a bunch of exposure to the upside. If they put it below 663, then we'll have a bunch of exposure to the downside, which may balance out some of the remaining 2 billion of exposure. So it might negate it. It might actually send this this market completely neutral if it all shows up to the downside, and then we'll be in a very different environment in terms of volatility and in terms of gamma.
Yeah, it's interesting. Those mechanical things that the big money does, it's like it makes you wonder, like, what triggers a bear market, right? Like, I'm curious because there's so much money at stake. I guess because they can make money to the downside too, but it does seem wild with with the way that the market makers work with the delta hedging and all that jazz, that extended bear markets can happen. Like, I'm just curious, like, I mean, the markets, animal spirits are one thing, but man, there's a lot of people who are really smart, have a lot of money, who want the markets to go up. It's fascinating.
Yeah. So, Jack, do you have an answer for that?
The question again, I'm sorry. What
It wasn't
causes
really a
bear
question,
market?
more like an observation. There's so much with the, what Kane was talking about, gamma, delta hedging. Basically, there's so many people with a lot of money, with a lot of power, and a lot of instruments of power, who want the market and who are smart, who want the market to go up.
Well, I
It's
want a full
fascinating to
head
me,
of
but
hair too. That doesn't mean I'm going to get it, you know.
yeah. Well,
Most
it's
smart
interesting.
people
Like,
want the market to go up means nothing. The bear market starts when you're looking at the S&P right there. These moving averages, whatever you want combo you want, they're levels of support. The market falls back, hits that support, and bounces higher. When that level of support becomes a point of resistance and stays a point of resistance, then the next lower moving average becomes a point of resistance, then the bear market is on.
yeah, I'm just
Yeah.
curious what forces the market makers, the big money to. Like, I
This
guess they
time
just
it'll be profit taking. This is insane. If
Mm.
these guys have been hanging on, and here we are coming into the end of the year, what would cause it to come down is just massive profit taking, which is going to happen at some point.
Well, that's what I was kind of getting to, and what Bodine actually said too. I think it was you, Bodine, but it's almost like it's engineered. Like, a bear market is actually a choice more than especially now with all of the economic or with all the financial instruments we have to control it. It's almost like a choice rather than animal spirits just taking it where it wants.
Well, so I'll give you my 2 cents. So the market there, we've got to discern between the market maker and large institutions. So the market maker doesn't care about the direction of the market. The options market maker doesn't care if it goes up or down. They want that bid-ask spread on their options, or the premium on the options that they're selling. So the market maker, literally, the ideal scenario for the market maker is if prices don't move at all, because they get to keep the premium on every single option that they
Right.
ever sold, right? So the market maker doesn't really care whether it goes up or down, and that's why they hedge themselves to neutral so that way if it goes up or down, they don't really care. So who cares whether or not it goes up or down is going to be those large institutions, and the biggest institutions are your insurance companies, the retirement funds, those types of really big, really stodgy institutions. And they have rules. They have rules like we cannot buy below the MA200, for example. And that's why you'll get a really long extended bear market, because they're waiting on all the smaller guys to push the prices back up above the MA200 before they start their buying programs and add their money to that upside. So what would start a bearish turn in this market right now is simply there's no more buyers. So when I first got on, I said, it's kind of high here, I don't really want to buy. And Jack was like, it's kind of high here, I don't really want to buy. If I'm a major institution and Jack is a major institution, we just removed a large pocket of money out of the market that wants to buy. Now 3, 4, 5, 10, 20, 40 other large institutions say, I don't really want to buy here either. Suddenly you don't have any buyers in the market and you do have sellers in the market. And so that's going to keep on selling down until you find buyers in the market again.
Very
And the
interesting.
strange thing about the market here is that higher prices bring in more buyers.
Yeah.
Lower prices don't. People don't, they're not value investors. They want to sell a stock that's not moving to jump on stuff that is moving. And the psychology of the market is higher prices bring more buyers.
Right.
So, when the institutions get out, they're bigger than the retail guy, but you'll be able to see it in a simple chart when the moving average is no longer a point of support, it becomes a point of resistance. That's the first tell.
And the top consumers still have a ton of disposable income. So in America, it just makes you wonder, like, again, I know this, look at that on the weekly. It's crazy, but
Now, the biggest catalyst of all, in my opinion, is if mortgage interest rates come down to a point that people who were reluctant to sell because they didn't want to take on a higher price mortgage if they already have one at 3 or 4%, if mortgage rates come down and we see a stimulus in the real estate market, and people are cashing out on home equity loans, putting that in the market, this market will rip.
Mm.
yeah, I just, and this is the 200 moving average it's a blue line. Man, I mean, if you take out, like, you got COVID, take that out, the flash crash of 18, which didn't even really bring us touch the moving average, didn't really bring us down below it. I mean,
Yeah.
we're just kind of this bull market basically has been going on for with very small pause since October 11.
That's why people love the US stock market, right? If you look on a weekly basis or a monthly basis, you're basically never going to go below that MA 200 line. Or on a daily basis, yes, but not on a weekly and monthly. It's very rare, especially on the monthly, that you're going to see it go below that. And that's why the US market is the largest financial market in the world. Everyone wants to participate because we have all the elements of a continuous bull market. And so basically we have population growth, we have GDP growth, we have rebalancing in the S&P 500 that helps that go on also, and it is market cap weighted. All those things keep the U.S. in a bull market. Now, if you remove any one of those things, there's no guarantee anymore. For example, Japan, they don't have a growing population, so they don't have the same guarantee.
Yeah, that's fascinating. I mean, it is true. Like, if you look, I mean, last sort of bear market, I guess it was a bear market, was 2022. I mean, it really lasted from what? And we dipped below April, May, June, July, August, September, 7 months, and then we were up again. It was less than a year.
Yep.
And then we're just climbing up. It's pretty wild when you zoom out. It puts things in perspective. Time in the market better than timing the market is what they say. But you can trade. You can trade along the way. You can trade along the way.
If you don't know how to trade the market, yes.
You can trade along the way and get some bigger gains while you're socking away those 401ks, though, right?
Yeah, yeah. It's like, I mean, time in the market is lazy money, right? Or you don't know what you're doing. You just put it there and it grows. Yeah.
Yeah. I mean, so we have like companies like INTC. Like, I was trying to think about a thesis, like what's moving faster, what stocks will lead in the next leg, maybe over the last month, if nothing happens. INTC, MU. I mean, these both are. I mean, are chips going to just keep on leading the way? What's your opinion, both of you? Semis,
Go ahead, James.
Yeah. So I think they will be one of the leaders. I don't know that they're going to be the absolute leader. Right now, actually, in the last week or two, what you've really seen is more of a focus on specifically quantum chips, like companies that are specifically quantum. It seems like that's the new buzzword. And so if NVIDIA and MU and all AMD, they start calling themselves quantum chip manufacturers, maybe they'll get that giant run up as well. So we'll see. But chips, I think, are going to be at one of the strongest sectors for as long as we're in a bull market.
Yep.
Yeah. Don't fade chips. Jack, what do you agree?
Yeah, I mean, I'm long. My biggest position is NVIDIA, so putting my money where my mouth is, I think that's going higher. Also, AVGO, another one that I absolutely love that I'm long. And my third one I'm adding to is ANET, Arista Networks. So I think the chips are good. I think everything about it is good. The data center stuff bothers me a little bit, but the chips, the switches, the software that makes it work, all that is good. But this data center stuff is a little troublesome.
How so?
Well, you can build all the data centers you want, but you can't power them. I mean, it
Right.
ain't no good if you can't plug it into something. And the bottleneck in the whole thing is energy, which is bizarre. That you would think that would have been solved, but nuclear had such a bad public relations events back to back, here and abroad. That was all driven by the oil companies, though. But I think nuclear is gonna be clean, and that's going to be the energy source going forward.
Yeah.
But in the
And
meantime, I still think this is all good.
I think soon you're going to start seeing data centers get a worse and worse reputation. Basically, what is starting to come to light right now is if you notice your energy bill, it's probably going up, and even if you're not using any more electricity. And the reason is because these large data centers, they're bidding up large blocks of energy, and to sell these large blocks of energy, these power companies are willing to give them a deal. And then so that makes it more expensive for everybody. So there's this huge demand from these guys. They're bidding up energy prices or utility energy prices. And then just for us to compete, it's sort of like its own market, its own stock market, if you will, except it's energy prices market, the utility energy prices market. So for you to get your electricity residentially, you're bidding against that giant data center, and they've got billions of dollars and they can negotiate better deals than you can as a resident. And so your energy prices are going up. I think as people understand that more and more, there's going to be a lot of outrage and be like, why are we basically financing these giant data centers when they're billion-dollar corporations? I think you're going to start
Tell
seeing
me
that more
about
and
it,
more.
dude. My electricity is high as
Water
crap.
is also a problem, as Chris says. The other thing is, if these data centers, they just don't seem to be evolving and becoming more efficient. It just requires so much resources. I mean, you got to pay regular electricians 150 grand a year just to hook the whole thing up. And I just think it's probably the weakest link in the whole thing.
Yeah, I
In
mean,
my
I
game.
live I live right I live right by Data Center Alley up here in the DC suburbs.
Yeah.
There's all, I mean, I think all all the companies have data centers all in a little farther out from where I am, but Reston, Chantilly, I mean, you go by there, it's just data center after Herndon, data center after data center after data center. It's crazy. So,
Yeah, you'd think there'd be a chip that could make the data center more efficient, so you wouldn't need all these other things, right? Just whatever, memory, something has to give in there. That's like a dinosaur type industry in AI, data center. Think about it, just big computer holding a bunch of junk.
yeah,
We're
well,
gonna need it. So,
Boding here is saying, oh, got Bill. Looks like he lives in Reston. Welcome, Bill. Bodine is saying, Bill, I want to move. I want to move by that lake in Reston. There's a really cool lake, not Lake Anne's, another one. It's really cool. But that's an aside. Bodine's saying he used to work in a mainframe data center, and the cooling was the main expense. I think that brings us to, back to what you mentioned, Jack. But nuclear. I mean, to me, right now, nuclear presents some pretty good buying opportunities.
yeah,
SMR, I'm pretty sure Oklo is at all-time highs. But I don't think Oklo is like the worst company in the nuclear space. But SMR actually has a business. I mean, it has revenue actually. But this is a pretty good buying opportunity. I mean, we're bouncing off this resistance line. I kind of like this actually. I don't know what y'all think, but I think I might go long here at NewScale. Just
hey,
because.
Brandon Brown, I did not mean to insult anybody that's an electrical contractor or electrical engineer. My son is in all that stuff, and I think you guys deserve at least 150. All I was saying was there's a shortage of electricians either, and they got to pay them a lot to hook all this stuff up together.
Yeah.
So go get it, man. I'd love
Yeah.
to see all electricians make $250,000 a year. They probably deserve it.
Yeah.
I know,
Yeah.
Brian.
Yeah. Sam, power. Yeah, that's what we're talking about. This is power, nuclear power, right? SMR, CEG. Had a credit spread open for that for the last about 45 days. We're at, you'd like this, Jack. We got I got a, what was it? 310, 300 put on CEG, for about $2.250 per contract about last in early August. So that's about to reach 100%. It expires tomorrow.
Yeah, so when you put it on, you made 25% right there, right?
Yeah,
And now you get
yeah,
to keep 100% of that 25% profit. Very nice.
yeah. Got a little scary. Started dipping below that, but it did bounce off. Um, but yeah, I mean, so Constellation Energy this is another one. They have pretty good built out infrastructure for nuclear power. BWX, sorry, BWXT. BWXT is another one, but again, just like Oklo, now this actually is a better company than Oklo, BWXT. They have revenue, they have products, but SMR, I think, is right now offers the best entry for the nuclear powerplex. It is off those all-time highs. Earnings wasn't great. I'll give you that, but I think long term, I mean, they just announced last week the UK and the US are going to basically do a nuclear development bilateral deal where they're both going to help each other develop nuclear energy. I assume it's going to be coming from Rolls-Royce on Britain's side, and then some of our nuclear companies on our side, maybe like SMR.
Take a look at XLU, just the good old-fashioned utility index.
Yeah. What do you think about it? Going
Well,
higher?
I'm long AEP. You know, I think you got to have some utility going in your portfolio. That's in my dividend portfolio. Yeah, they've done good.
What was the XLG? Was that the one that we were just on?
XLU.
XLU.
That's like everybody's retirement ETF, right? Utilities.
Yeah.
Dividend yield of 2.7. That's not a bad sandwich.
No, that's
And
good.
this is good stuff.
Jim bought Rolls Royce at $1.25 a share. What is it at now? Ricey, that's right. RYCEY. Ooh, good on you, Jim.
Yeah, way to go.
Yeah, so Rolls Royce doesn't just make cars; they make jet engines actually too, and they make small modular reactors. So Barry's made a fortune selling premium on XL. You're gonna make Jack cry, Barry.
No. Barry, tell me how naked puts or covered calls or how you selling premium on XLU. Let's share that with the good peoples.
Both.
Both. All right. Cool. Yeah.
Nice.
The naked puts is great, man, especially on something trending higher. When you have a stock, any stock trending higher, you're able to do the triple crown, which is 3 ways to make premium income: covered calls, credit spreads, and naked puts. When you have a trend like that, that's a good trend right there.
Yeah. Yeah, this but like uh as Britain's only like SMR producer, I do think Rolls-Royce probably does have some more room to run, honestly. I mean, it's in a good trend if we go back. What are the gamma levels on this baby?
Uh, let's see. It's RYCEY.
RY, yeah, CEY. Yep.
Or it's just having trouble loading at the moment. It'll
No
get
worries.
there.
Let's look at the volume profile and see what, I guess it's not gonna be really indicative of anything. Set all
Yeah.
times.
That one's not pulling up for me for some reason. RYCEY. Does it have options? If it doesn't have options, I can't pull it.
You know what? It might not have options. Let's see. Nope.
Yeah. Okay. Yeah,
I just
that's why.
changed it. All right. Well, let's go to another cool one. What about SMR? So I think I mean if the bull market continues, like, tech is obviously like, honestly, Google probably has some good room to run in terms of the tech companies. Apple maybe not so much, though they are doing a historic buyback program, which I believe started this month in September. Um, but energy, and if I wouldn't want to fade AI, so AI. And so if you're building out your silos of theses, right? AI, energy, and then quantum, we're talking about, I mean, that could be something if you want the really high growth stuff. That I will say, like, companies like IonQ and Qubits aren't real companies yet. It's a kind of an untested thing, but it could, and they are, it's not like they're like trading at $1 either, but they're not too expensive. But it could, that could pop. But energy and AI, I think, are really the two, in my opinion, the safest bets.
Yeah.
Yeah,
So
well,
in SMR gamma levels, it's actually there's more support than there is like
that's
um,
good.
like chance for running up. So we got strong support at 36.5, which is not too far below where we are right now. And it's that chop sideways period. A lot
Yeah.
of support right there. So the chances are very likely that it's going to go higher. It's just we don't see a lot of positioning there yet. We do see some at 40, which is pretty, yeah, that was near the high of today. But if we can get beyond 40 and then we start seeing people getting more interested in SMR, then we'll see gamma levels grow above it. We just don't see significant amounts of gamma levels above it right now.
Mm-hmm.
Maybe we could be there. I mean, it could be an
I like
early play.
that. I like that support, though. I mean, if we're going, if we
Yeah,
want to go long, the support's good.
yeah. But yeah, I mean, if you're selling calls or what do you care? Like
Right.
it could just kind of go sideways forever and you wouldn't care.
Right. Yeah. Um. Got it. I can go and look. Let me go look at the options chain, see if there's, because Sam, what was it, Jeremy was looking for a long swing idea. We could do I mean, maybe a debit spread you could do for this. I mean, there are gamma support levels basically at what Kane was saying at 36.50. So, with the debit spread, you only need to go up a little bit and you'll still be, as long as it doesn't go down, basically, and it just goes up a tiny
Right.
bit, you could be in profit. So, um, yeah, I'll see. We'll talk about the China ETFs tomorrow, Sam, if you want to show up. I'm gonna go look at some debit spread ideas, and I want Kane to show, because he's got this really. We've been talking about gamma levels a lot, and I just want, maybe show how it looks on your platform there, Kane, just so people can see when we're talking about gamma, like what does it actually look like.
Yeah,
While I try and put together this spread.
absolutely. Absolutely. Oh, let me,
Interesting stuff, Jim. I did not know that. The first one to get licensed. Yeah, so they got a good advantage there.
all right. So this is the GEX or GEX trading terminal that we just put out. We just finished this, not even maybe a few days ago, and is the extension out of my own personal software that I programmed. Except obviously it looks a lot better, and it works. It gives you a lot more things, like things that I wanted to program in for myself, but I just didn't have the computing power or the extra capacity to be able to program in for myself. So this has now replaced my own personal software, and I use this every single day. And it's been giving really great levels. For example, if you looked at if we look at IWM today, if you go into my Telegram channel, I shared with folks yesterday. I was in an opening playbook, and Graham and Nate asked me, "Hey, what does IWM look like?" And I said, "Well, there's this very clear gamma spike at 244. At the time, it was only at 240, and that was pre FOMC." And I was like, "Well, that's really far away." But Graham went ahead and he did a spread, a 241, 240 spread on IWM. And immediately after the FOMC announcement, within a few minutes, it ran all the way up to exactly 244 and then backed off. And then Graham took profits for 77%. And this morning, if you look at my Telegram channel, I was looking at IWM again at 0 DTE. It's good for a lot more than just 0 DTE. But if you want to know levels, this is what we were talking about when we were describing gamma earlier. Like, what is gamma? What does it mean to market makers? And another way of putting it, other than the way I told you that, hey, this is where they have the most risk. The market maker, in other words, where you have the most risk is where you're going to have the biggest reaction, right? If you say that there's a fire in my kitchen, you're not just going to sit there and be okay with that, right? You're going to be running around, getting buckets of water, trying to put that fire out, right? You're going to be moving, you're going to be doing stuff. And so these are areas in which, in the market where the market makers are going to be doing something if we get closer and closer to those levels. And that doing something, the thing that they do often forces the prices towards exactly the level that they're worried about. And they don't have a choice. And again, they don't care if it gets to that level. All they care is, are they protected if it gets to that level? So they don't care that their activity pushes it towards that level even more because they're protected. Okay? So over here at, is this IWM? Yeah, so this is 0 DT IWM. I was targeting that 244, 245 level, and it's actually 244 when I wrote it. And you can see the high of today was basically 244.85. Is it? High of today was 244.92. So I'd say that came pretty darn close. And I got out before I got out when it was at 244.50 ish. With 135% gain. If I held on, obviously it'd be closer to 200%. But so that's the power of having these gamma levels. You know where the market maker is going to react, and they're going to do something. And the bigger the risk they have, the more they're going to react, the faster that you're going to drive prices towards that direction. And if you know options, if you're doing single options, the faster the move towards your target, the more money you make. The less time decay you have to deal with, the bigger the implied volatility expands. And so therefore, the faster you make money inside of that call or that put that you have. So that's the advantage that we have with looking for gamma and areas where the market maker is going to react big time. So I've got this scanner here. I can start scanning, look for the biggest opportunities. And for me, because that's the edge I'm looking for, I want to look for places where the market maker would have to react in a very big way in order to cover themselves if it starts to move in that direction. So for example, this percentage volume to the gamma exposure, that is an indicator of how panicked they're going to be, basically. So they'll be really panicked on DAY. Or SOLV, PSKY. These are all possibilities right here. But we were just talking a lot about energy, right? So EOG, CVX, I might be really interested based on our conversation today about EOG or CVX. So EOG looks to the downside, so let's look for something to the upside. It's CVX right here.
CVX is trending, a little down today.
Okay, let me see CVX. I'll bring up a chart. And so if we look at CVX, you can see that, yeah, it broke above the MA200, it retested it, and then it's been on an uptrend since. And what the gamma exposure terminal, trading terminal is telling us is that they're going to get a little panicked at 160. Okay, and that's the major one right now, and we're basically there. So basically, that wouldn't be my number one opportunity just because we've already made that move. We're at 159. There's only $1 left to go. But if I would, for example, if I want to do something very short term, and say, hey, this could hit 160. I want to take advantage of that 80 cents. Then I could buy a next week expiration or 2 weeks. It's suggesting 2 weeks expiration, a call that, and if it moves in 1 or 2 days, I'm still going to make a very significant percentage on that call. So that's what it's showing us right here.
That's
Let's
sick,
take a look.
man. This thing looks great.
Yeah, and people have been killing it. Like even I just had a master class yesterday, but even before that, people have been emailing into me. They're like, I just and I wasn't intending to have a day trade, but it moved so fast, it hit my target within a day, and people making like 90%, 130% plus in just a single day, just because it moved so fast, because that market maker was adding their buying power to the move in order to cover themselves.
And that's some serious buying power. I mean, you know what? I mean, I'm not saying we're not powerful as retail traders, but
Yeah.
you know, they have a little more juice.
Yeah. So what, for example, like what I'm actually scanning for, what that percentage means on the right over here is that, so the larger the percent distance away we are, the more likely they're going to be, the more shares they're going to have to buy on the way there. And so what you see is that the market maker starts to represent, if for example on BG, we figure out that on the way to this gamma pocket, let's just say they have, where is it? The average shares per day traded per day over the last 30 days was 2 million shares. But if they have so much exposure that they have to buy 2 million shares, or they have to buy even more, like 10 million shares, then they become a huge percent of the daily volume. And if then obviously they're going to move the market if they're a huge percent of the daily volume. So sometimes their exposure is so big that they become 20, 30, 40, 50, 60, 70% of the daily volume. And that's why you'll see in certain price charts, you will see these giant volume spikes like this. Okay. So if normally you trade, what is this? The average volume here was 10 million shares, but on this day it traded 45 million shares. Well, probably at least 10, 20, or 30 million of that additional volume of that day was probably a market maker panicking that they needed to cover themselves for some reason. Right? So you get these large volume bars, it's always an institution. And a lot of times it is a market maker.
And so they were afraid that it jumped up like that, and they were kind of going to get their lunch handed to them, and so they started selling.
No, so what probably happened is that it went up to here, it started to drop on its own, and they probably had exposure near that MA200.
Got you.
And so they had to sell into that MA200 to unwind their risk, and so they participated in that selling.
Yeah.
And then it also explains things like why around options expiration is there a lot of volatility, and why is there a lot of price movement generally around options expiration? Well, if it looks like this, where all of your expiration, all of your gamma all your risk is expiring on September, then suddenly a bunch of people come in and they buy a bunch of puts and calls at further expirations. Suddenly that market maker has to readjust. They have to readjust all of their hedges all in one day. And so that's why you get a ton of volatility, because they're buying and selling a whole bunch of shares as each new call and new put option order is coming in. And so you get a bunch of volatility that day. And depending on where all of the strikes land, then you have you could have a completely different looking gamma structure in place. And then that hedging activity would have pushed the price of the underlying stock either up or down. So the market maker activity does have a large effect, if there's a lot of exposure, they can have a large effect on the underlying movement of the stock. And people just like, oh, that's just what happens. Oh, that's just, option expiration volatility. Oh, that's just, where the level was. But not knowing that it's actually that's the market maker's level. The market maker's flurry of activity happening around options expiration that's causing all of this.
So let me ask you a question, and I'm curious. So the market maker has a lot of say in it, but can big institutions actually kind of push around the market maker and force them to do their hedges that send the stock price to where they might want to?
Oh yeah, absolutely. Okay.
Yeah.
So for example, if you have a huge gamma pocket right here at 82.5, now remember, the market maker doesn't care. They literally don't care what price it is. They just have to hedge themselves so they don't lose money as we go up into 82.5. So they have the potential to lose, what is this? This is about 3% move. Okay, so they have a potential to lose about $10 million. If they don't hedge and it moves up to here, they could lose around $10 million. Okay, so if an institution, just say they're the ones who bought all these calls, and then so that's already positioning, and then they go into the underlying stock market and they start buying up shares as well. Well, that's going to push the price upwards, and then the market maker has more risk. So they'll start hedging as well. That's going to push it up even higher until the market maker is done hedging themselves when we finally hit 83. So that is one way that a very large institution could push around the market maker, but the market maker doesn't care because they're just hedging themselves so that they don't lose money. They already made their money when they sold the options.
I don't know if you mentioned this, but forgive me if you did. But just for people, so when an institution would buy those strike prices up there, the reason the market makers have to hedge in the first place because they're selling at that. They're selling those institutions those shares, right? So
Right.
they're exposed on the other side.
Exactly, right. So basically, if an institution says, "Hey, I'm going to buy a whole bunch of contracts at 83 at the market maker's ask," then the market maker has no choice. They have to sell all those contracts. They're bound by the rules of the CBOE and legally to actually sell those contracts. So when they sell those contracts, what do they have? They have naked calls. They just sold naked calls. And then, which is fine unless it moves up to that price, then in which case they are potentially losing a bunch of money, because if we go through that price, suddenly they have to make good on all those contracts. And they would have to buy millions of shares at the market price in order to deliver if the institution decides they actually want the shares, or they have to pay the difference, still millions of dollars. So the market maker, they then turn, as they get into a riskier and riskier position, they turn more and more of their naked calls into covered calls. And how do you turn a naked call into a covered call? Mm-hmm. You buy the underlying shares, right? That's just like a covered call. Just like, I mean, Jack should be able to explain this better than anyone. So,
Yeah, and the other thing though, an institution can take on a massive position, hundreds of millions of dollars. The market maker can't do that. They have net capital computation requirements that they're firm with the NASD, the SEC. They have a minimum capital they got to keep in there, and so they don't really want to be long or short. I was a NASDAQ market maker for years, and I mostly traded from the short side because it was easier to cover than chase. But you really wanted to be kind of flat at the end of every day, right? You don't want to carry a position overnight because then they do a mark to the market. And if you're way off, your net capital is going to suffer. And that's exactly how they go out of business. So they can't take on a big position like an institution, but like Kane said, as a NASDAQ market maker, you don't care where the price goes. You want to see the stock reach a level that yields the most volume because you're buying and selling on the bid and the ask. So same thing with an option. It wants to seek a price that yields the most volume. That's the best for the market maker because he could stay flat pretty much, right? You've got action on both sides. But an institution that's buying, they can push this thing up.
I love it, man. And the thing is like all this is going on under the hood I mean, especially with computers and the quants now, I mean, very fast. And so the fact that you couldn't see this without a scanner like this is just, I mean,
Uh,
this
this
is,
is
this
this
is
is
a hack.
priceless. This is
Yeah.
absolutely priceless for anybody that wants to really have confidence in a high conviction trade. This is,
Yeah.
I'm shocked that you have this, really, to tell you. The
Yeah,
dev team did an amazing job.
Yeah.
I'm
Let's,
not
they did.
shocked.
They
I mean,
did.
you're
Yeah.
brilliant. I'm not shocked about that. I'm just shocked that they've got this thing so perfect now. You guys have done
Yeah.
a great job, Kane.
I'm very pleased with the developers. They were amazing and
Yeah,
they
I
worked
don't
it
even
very
know
well.
how, if you're selling this, I don't even know how, what price would you put on it? 10 grand?
Right. So, well, it's actually, we'll tell people about it soon, but we're doing the special, the launch special, so you can get in for way, 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 way cheap at the
Oh,
moment.
it's already available for sale?
Yeah, yeah, yeah. We just
Oh,
launched
wow.
a couple days ago. We started selling. Yeah.
That's amazing. So you basically took your hand-built program, you built it out of your head, coded it. Now the dev team took it over and gave it this polish
Yes.
up. Wow,
Exactly. Yep. Yeah.
that's amazing that you got this. I'm impressed, and I'm hard to impress. This is, and
Thank you.
that you can let people in on it too. That's wow, cool.
Yeah.
I want it.
yeah,
Yeah.
no, this is super cool. I mean, yeah, let's talk about it. Like what, I mean, there's demos out the wazoo, folks. Like, I mean, this stuff works. Um, I've been hacking together Gamma on my own, but I'm gonna, I want to start using this thing. So
Wow,
it's
wow, this is really cool.
Kyong loves it. Let's get into it, man.
Yeah.
How can other people, start using this for themselves and really how to use it effectively?